Welcome back to the Longacres Finance channel. Today we will be taking a look at the monthly watch list of high-yield dividend stocks for August 2021. July is already on the books. The watch list returned 1.54% last month, which was better than our benchmark VYM that was up 0.55%. The S&P 500 offered a better return of 2.44%. We will dig more into the performance later on in this video. For now, let's focus on the stocks I will be considering during the month of August. There are a total of 24 stocks that pass muster to make it onto this month's watch list. The average dividend yield offered by these companies is 3.51%. To me, that is a pretty healthy dividend yield in today's overvalued stock market. Collectively, these companies are a little less than 3% overvalued based on dividend yield theory. Which again, if you think about where the stock market is today, it really is a pretty good overall valuation to find some gems. Let's run through the list first, and then I'll provide more color on some of the individual companies. Up first this month is a newcomer, Enterprise Product Partners, with a juicy 7.98% dividend yield. This limited partnership provides energy services to producers and consumers of natural gas, oil, and other refined products. Essentially, they are a pipeline business. Based on dividend yield theory, the stock appears to be about 16% undervalued right now. They are also the only energy stock on the watch list. Next, we have Morgan Stanley, also making its debut on the watch list. If you follow my channel, you have seen this company make several appearances on the high growth dividend watch list. But now for the first time, after the company raised its dividend by 100%. That's right, they doubled their dividend, which also means the dividend yield has doubled. They make it onto the high yield dividend watch list with a 2.92% dividend yield. I already liked Morgan Stanley for their dividend growth, and now they have a pretty attractive dividend yield as well. Based on dividend yield theory, Morgan Stanley is trading for about a 36% discount. I take this valuation with a grain of salt, due to the higher than normal dividend increase. Ideally, we will see the share price climb higher in the coming months, pushing the dividend yield closer to historical averages, and offering a sweet return in the process. Next we have Amgen, that has been on the watch list since it started. Amgen looks to be about 9% undervalued. Next is Lockheed Martin, that has been on the watch list for 7 of the past 9 months. They look to be about 5% undervalued right now. Next is Toronto Dominion Bank, that has also been on the watch list for 7 of the past 9 months. The company was not part of the June and July watch list, and its share price has fallen about 7% during that time. Hopefully it's ready for a positive move this month as it returns to the watch list. Based on dividend yield theory, the share price still looks about 26% overvalued. Next is Principal Financial Group, that has been on the watch list since the beginning. Based on dividend yield theory, the company looks to be about 9% undervalued, and offers a very good dividend yield above 4%. Next is Truist Financial Corporation, that has been on the watch list since the beginning. Truist looks to be about 16% undervalued right now. Next is 3M Company, another stock that has been on here since the start. 3M looks to be about 7% undervalued right now. Next is Evergy, another one of the original watchlist stocks that has never fallen off. Evergy looks to be about 8% undervalued heading into August. And Darden Restaurants, a newcomer, rounds out the top 10 for this month. Darden is appearing on the watchlist for the first time, sporting a 3% dividend yield. It looks about 34% undervalued right now. And I'm excited to see how it'll perform going forward and what it has to offer the watchlist. As you may know, I personally only focus on the top 10 high-yield stocks each month. And last month I decided to implement them into my Roth IRA investing strategy. These 10 stocks we just went over have already been included in that portfolio earlier today. I'll have a separate video out later this month that will cover the portfolio and strategy in more detail. If you'd like to see my last Roth IRA portfolio update, you can click the link at the top of this video right now. Let's get back to the rest of the watchlist. Up next we have the Royal Bank of Canada, returning to the watchlist after a 2-month break. It looks like most of the Canadian dividend stocks fall off and return to the watchlist during the same months. I'm not sure if there is something in the data that is leaving them off the screener, but perhaps it's worth digging into in the future. Royal Bank of Canada looks to be about 37% overvalued right now. Next we have Broadcom, that was part of the top 10 stocks for the last 3 months, but has dropped down to number 12 this month. The stock appears to be 12.5% undervalued right now. Next we have CMS Energy, that was also part of the top 10 stocks for the last 2 months. They look to be about 2% undervalued right now. Next is Philip Morris, which is appearing on the watchlist for the 6th consecutive month. The stock still sports a pretty attractive dividend yield of 4.8%, but looks to be about 8% overvalued right now. Next is Kellogg, that is also making its 6th consecutive appearance on the watchlist. Kellogg looks to be about 10% undervalued right now, with a good-looking dividend yield of 3.66%. Next we have DTE Energy, that returns to the watchlist after missing the month of July. The stock looks to be about 4% overvalued right now. Next we have Sempra Energy, that is making its 6th consecutive appearance on the watchlist. Sempra looks to be about 13% undervalued right now. Next we have WEC Energy Group, making its 8th consecutive appearance on the watchlist. The stock looks to be about 4% overvalued right now. Next we have Southern Company, that is another one of the original watchlist stocks. Southern looks to be about 9% overvalued right now. Next we have General Mills, another newcomer, appearing for the first time on the watch list. General Mills looks to be about 4% overvalued right now, with a decent looking dividend yield of 3.47%. Next we have Kimberly-Clark Corporation, making its 7th consecutive appearance on the watch list. Kimberly-Clark looks to be about 5% undervalued right now. Next we have Alliant Energy, one more of the original stocks to the watch list. Alliant looks to be about 7% overvalued right now. Next we have Bank of Montreal, that returns to the watch list after a 2-month break. BMO looks to be about 37% overvalued right now. And finally, the last stock this month is Rogers Communications, that also returns to the watch list after a 2-month break. RCI looks to be about 28% overvalued right now. There you have it, the 24 high-yield dividend stocks for August 2021. There are 7 companies that have been on the watch list since the beginning, November of 2020, and if they can stay on for 2 more months, that'll be a full year on the watch list. They are Amgen, that has returned 13.72% between November 2020 and July 2021. Evergy, that has returned 21.51% during the same time period. Alliant Energy, that has a return of 8.27%. 3M Company with a return of 26.77%. Principal Financial Group with a return of 63.27%. Southern Company with a return of 14.63%. And Truist Financial Corporation with a return of 32.56%. For the month of July, there were 20 high-yield dividend stocks on the watch list. Collectively, they returned 1.54% for the month. All but one of the stocks, Philip Morris, were potentially undervalued or fairly valued. The 19 undervalued or fairly valued stocks offered a slightly better return last month of 1.57%. Both were ahead of Vanguard's high-yield ETF, ticker symbol VYM, that was up only 0.55%. The broad US market had a much better return in July. SPY, the S&P 500 ETF, was up 2.44%. Year-to-date, after 7 months now, the watchlist still offers the best return of 18.5%. SPY slides into second place with a return of 18.06%. The strong return last month gave it the push it needed, and it's closing in on the watchlist with 5 more months to go this year. The fairly valued and undervalued stocks trail with a return of 17.53%, and VYM brings up the tail with a return of 16.71%. Since inception, so adding the last 2 months of 2020, the watchlist has the best result with a return of 37.98%. The fairly valued and undervalued stocks are close behind with a return of 37.65%. SPY is slightly ahead of VYM with a return of 35.77%, and VYM is up 35.48%. These are all very close returns, but thus far the watchlist has offered a slight margin on its benchmark and the broad US equity market. I think this margin will continue to hold and possibly grow over time, as quality companies should offer better than average returns in the long term. During the 9-month history of the watchlist, there have been a total of 42 unique companies that have appeared on at least one watchlist. The best return while on the watchlist goes to BMO, that returned 80.21% between November 2020 and May 2021. The stock fell off the watchlist in June, and therefore its record return is not impacted by the last 2 negative months for the stock. It's back on the watchlist now, so we will see if it can continue its total return climb to be the first stock to reach that nice 100% return threshold. The second best return came from Toronto-Dominion Bank, with a 66.32% gain during the same period as BMO. Just like BMO, Toronto-Dominion skips 2 negative months off the watchlist and now returns to climb once more. Some of the other notable gainers are Cisco with the 57.67% return between November 2020 and July 2021. Cisco unfortunately did not make it onto the August watchlist, and we will have to wait for it to come back to see this return climb higher. JP Morgan offered a 51.19% return between November 2020 and February 2021. Principal Financial Group offered a 63.27% return during its time on the watchlist. They have been with us since the beginning, and will look to catch up with Toronto-Dominion and maybe even BMO in the coming months. The Royal Bank of Canada returned 49.95% between November 2020 and May 2021. It was not on the watchlist for the last 2 months, but returns in August to make an attempt to push past 50%. And State Street returned 44.54% between November 2020 and March 2021. As of right now, there are 0 companies with a negative return while on the watchlist. That is a pretty impressive statistic from these 42 companies. I have also been tracking how a buy and hold approach strategy would have worked with this watchlist. If you invested an equal amount of money at the beginning of each month to all of the companies on that month's watchlist, never sold those positions, and continued the same investing pattern each month, this buy and hold portfolio would have returned 0.96% in July 2021. That is about 0.5% below the watchlist return for that month. The same buy and hold approach, but to only the fairly valued and undervalued stocks, would have returned 1.17% in July. That is also a weaker return compared to the return of the fairly valued and undervalued stocks from July. However, both buy and hold returns are better than VYM's return for the month, meaning that both these portfolios extend their lead on VYM for the year and since inception. On a year-to-date basis, the buy and hold portfolio for the entire watchlist is up 19.2%. The buy and hold portfolio for the fairly valued and undervalued stocks is up 18.69%, and VYM is up 16.71%. Both buy and hold portfolios are building a nice cushion on the year. Since inception, the buy and hold portfolio to the fairly valued and undervalued stocks leads with a return of 39.22%. The buy and hold portfolio to the entire watchlist is close behind with a return of 38.77%, and VYM trails with a return of 35.48%. Since last month's watchlist, I have also started tracking how well the top 5, 10, and 15 companies on each month's watchlist are performing. The top 5 companies from July were Amgen, Evergy, Lockheed Martin, 3M, and MT Bank. Collectively, they were down 0.6% last month, so another poor showing from the top 5 stocks, seeing how they had the worst return in the prior month as well. Companies 6 through 10 were Broadcom, CMS Energy, Cisco, Pepsi, and Principal Financial Group. These 5 stocks rocked a cool 3.17% gain for the month. Since inception, companies in positions 6 through 10 have returned over 50%, while the watchlist as a whole and the top 5 stocks have not offered such attractive returns. The top 10 stocks, which I personally target and include in my portfolios, returned 1.28% in July, pushing their since inception return to 52.06%. That's still almost 15% ahead of the watchlist return of 37.98%. It'll be interesting to see if these top-ranked stocks can offer outperformance going forward, or if this is just a random coincidence that has pushed them so far ahead early on. That's it guys, thank you for watching, don't forget to subscribe and see you next time.